There's different phases of life trying to accomplish different things. And so when you bring up something like a monthly paycheck, it's not only where does the money come from, but also how do I even pay the taxes on it? My employer's always done that for me. So how do I even begin to do that process?
Welcome to Modern Money Moves. I'm your host, Logan DeGrave, alongside Corey Holstein, CPA today. Corey, how's it going?
Good. Thanks for having me, Logan.
Absolutely. So we got a great show. Today, we're really going to talk about the difference between tax preparation and tax planning, how we think about tax planning here at Modern Wealth Management. And one of the things when I was an advisor, and Corey, I want to talk a little bit here in a second about all the clients we've worked with over the years, but oftentimes people would come to us when they're thinking about retirement, or maybe they've already stepped into retirement and they've said, I don't have confidence in how I get a tax efficient paycheck. How do I take, how do I take the stuff I have and actually translate that into a monthly income that makes sense for me? But Corey, I want to take a little bit of a step back here. So you and I have worked a long time together in the Lenexa office here in Kansas City. When I was an advisor, you were really working more with clients. You and I work side saddle, hand in hand with clients. And oftentimes what we look to do is how not only can we get a tax efficient paycheck for our clients, but how could our clients pay the least amount of taxes over the course of their lifetime, retirement, whatever it may be. Corey, talk a little bit about how you work with clients and prospects in Modern Wealth Management that's different than maybe a typical CPA.
Yeah. No, Logan and I grew up in the industry here together and worked side saddle with clients across the board. So there's different phases of life trying to accomplish different things. And so when you bring up something like a monthly paycheck, it's not only where does the money come from, but also how do I even pay the taxes on it? My employer's always done that for me. So how do I even begin to do that process? But really the focus for us is solving some of those immediate needs with this long-term perspective. My role here with Modern Wealth is working with the advisor, working with the clients directly and saying, how do we gain efficiency with taxes? How do we play this game really well where we keep as much money as possible at the end of the day?
So you said something there. You know, at Modern Wealth, we think about tax planning as being very proactive, forward-looking, where tax compliance or doing your tax preparation is just very reactive. And you know, Corey, you said you work really closely with the advisors here. One of the things I often said, because I had the luxury of working with you for a long time to prospects or clients, is how often does your financial advisor and your CPA or tax professional sit down in the same room? And oftentimes the answer was never. And what we found over the years was there was a good chance that prospect or client was missing something because they didn't know what they didn't know, and they didn't have someone working in conjunction on their behalf. And you said, someone say, well, why do you work so closely with advisors, Corey? Because, and I'll let you talk about this, you cannot do proper tax planning without proper financial planning. And that proper financial planning all starts with, what is this person's goals, hopes, dreams, desires? What do they want to have happen with their life? But talk a little bit about that, Corey, of why the financial plan is actually the first part of all this.
Yeah, and I'm gonna highlight what you said about the goals, the wishes, the dreams. What are my objectives here? Because looking at a tax return doesn't tell me any of those things, Logan. And so that's where we start with all of our clients, is to say, do you have a financial plan? How do we create this financial plan? What's important to you? That's the center of everything that we do from an investing standpoint, from a tax standpoint. And we're looking at this full picture to say, where can we gain efficiency along the way? How do we create different opportunities for us to achieve those goals? So it all centers around the financial plan. And if we don't have that context, it's really hard to know where we're aiming downside.
Yeah, and one of the things that we've seen over the years too, Corey, is you oftentimes will have someone sit down and they understand that they probably have enough money to retire. They understand that, hey, look, if I never saved another dollar, I never worked a day in my life, I can do these things I want to do. But the problem was they often had a silent partner within their retirement accounts, or they saved these retirement accounts and they didn't know the tax impact of withdrawing the money. So for us, tax prep, while it's important, you have to do it, right? It's not the high value impact to the person's life. And, I want to talk a little bit about for you and where you've done a great job with clients is charitable giving. And we're not going to get into all the strategies and those type of things, but oftentimes when you've sat in meetings with advisors, you've listened and, hey, look, we have a goal to do X, Y, and Z, or, gifting to the kids or whatever it may be. And the way that you say added efficiencies really wasn't reinventing the wheel for these people. It was really just listening and saying, hey, look, the way you're giving to charity, it could be more efficient. Or the way that you think about your legacy, we have these different type of accounts. Well, we don't want to leave the Roth IRA to charity because they don't pay taxes anyhow.
Right. Yeah. I'll highlight again. I mean, listening and discerning is really how I describe my role. My job is not to change your life. It's to say, what are you already doing? How do we make it better? And what I mean by that is when we look at this charitable example, and there's endless of these, but if we're already giving to charity, let's make sure we're capturing as much value on that as possible. And so there's different strategies we'll utilize just to, again, gain efficiency, save taxes on something you're already doing. But if you're giving $10,000 of charitable donations per year, I'm not asking you to give 20. I'm saying, how do I make 10 work for us efficiently?
Yeah. Yeah, and Corey, one of the things that I think is a big misconception is, and you've even seen this with clients and prospects, is they just give you their tax return and they say, hey, what would you do differently? And at that point, there's nothing to do differently because it's the haze in the barn. We've already completed the tax return. It may be, hey, look, maybe there's a mistake or something we need to amend, but for the most part, you're thinking not just 12 months out, you're thinking 24 months out. And then, potentially 20 years out.
Yeah, I think about these things at different time periods of life. The next 12 months, the next 3 years, the next 5, the next 10 is realistically where we start. And we have to ask ourselves, what do the next 12 months, how do we navigate the next 12 months? Because I also can't change last year's tax return. I also can't change next year's tax return, right? So how does this 12 months that I'm operating within fit into that 3, 5, 10, 15-year horizon?
I think tax planning is one of those things that if you're not doing it, you're missing an opportunity, not just because we believe in it, but tax planning is one of the main things that we do have some control over. So what I mean by that is we don't have control over the investments and the markets and those type of things, or how long we live and our health. But what we do know is we do know the tax code, okay? And we do know the rules that we can play within and the opportunities that we have. So when I look at that is you don't want a financial advisor, I'm a certified financial planner, that is your tax expert, right? You want a financial advisor that can be a shepherd's to services, that can really be the subject matter expert. So it's not just about investments and financial planning and tax, because Corey, we've worked on a number of cases. You've had to be very involved with the investment allocation at times. You've had to be very involved with investment allocation, not only because of what it was going to do to the tax return, but potentially what it was going to do for healthcare premiums and things like that. Because another thing people don't have confidence in when they retire or think about retiring is, what are they going to do for healthcare if they're not 65? So, Corey, it's all connected. And if you don't have someone that is playing quarterback, point guard, whatever analogy you want to use, it's going to be really difficult for you to be able to maneuver all these things that are happening in your life.
And it's also difficult for just Logan to handle all those different areas for one single person or one household. So it's important to get different experts who have different specialties, right? I don't go to the same doctor for my ankle, but I do my heart. They're different. They're very unique skill sets involved with each of these things.
But it's important though, let's just go back to the heart and we won't maybe say the ankle. Let's imagine we have two conditions that potentially aren't mutually exclusive, and it's important that you are advocating for yourself and or someone is on your behalf of, well, how is what we're doing with the heart or medication impacting another piece, right? You can't just look at anything in a silo, whether it's investments, tax, estate planning. They all have to work together, because If you go to a heart doctor and there's one problem with the heart, well, the doc's going to be the narrow focus, but there could be 3 other problems that we need to be cognizant of. So I think it's important that in anything in life that you're not going to be too siloed.
Yeah, and that's where taxes are a little bit different for us because, to your point, health insurance becomes a big factor. Legacy, that involves insurance. Estate planning, that has huge ramifications for us with taxes, especially since 2020 when the Secure Act came out. So all these different pieces, everything we do is going to end up on a tax return at some point.
Yeah.
During our lifetime, during our kids' lifetime, at some point in time, every financial decision you make is going to end up on a tax return. And every January 1st, your tax return resets. There's not much I can do for you after January 1st, at least regarding last year.
Sure.
So it is something we have a hyper focus on because it does have a lot of implications for all these different areas.
Yeah. So at Modern, we really think about, enjoying, preparing, and connecting. And what I've seen over the years is that people that have a hard time spending money, or maybe they have this fear of running out of money, one of the things that you can do with tax planning is actually quantify the savings over a lifetime and maybe even on an annual basis, with at least some certainty. So what I think you and your team have done a wonderful job of is, what have we allowed our clients to enjoy or connect with that they couldn't have if they didn't do the preparation piece of the tax planning? Because it could be, hey, look, we can take an extra $15,000, $2,000 a month because we've done this tax planning, or we don't have to worry about IRMA, which we're not going to get into, or we don't have to worry about, potentially a cutoff for income because of, we're not on Medicare and those type of things. So it's not just about tax planning and, we saved $41 this year. That's not the goal. The goal is allowing you to enjoy life, connecting with what matters most to you and your family and your goals and your legacy. And tax planning is a tool to do that.
Absolutely. I mean, the first thing that comes to mind when you talk about that is the amount of money our clients have given away, whether to charity or family members during their lifetimes. Having the confidence to do that, knowing where to get the money from, all those different pieces, that's a fun case to work on where
That's the enjoyment piece.
You really see the enjoyment from the clients, and you see the impact these people have, not only in their lives, but other people's lives as well.
Yeah, you've heard me say this 1,000 times, the most precious commodity we all have is time. And one of the things we worked so hard with clients on over years, and this doesn't happen in the first 3 months of a relationship or 6, we're talking long-term relationships where they've actually seen some of the benefits of all this tax planning and the financial planning of, hey, look, we love the calls and the emails of, and not even clients we may work with today of, hey, I've gifted to all the kids or the grandkids, or we took that family trip. And we did this because we had confidence around the plan and the preparation piece of what everyone's put together. Here's what I will say. One of the things, Corey, that you've seen over the years is oftentimes people that have tax planning issues or opportunities happen to be people that have assets saved, and they're really concerned about, do they have enough, or creating those efficiencies. It takes a lot of trust, and it takes a team of professionals that you're confident in, and it takes a plan that you have confidence in, and there's a lot of preparation and long-term forward-looking planning that goes into it. And I can think of one couple and specifically, and this has happened a few times, where Corey, their largest expense, their first few years of retirement, and I'm not kidding, was Uncle Sam. But if your tax plan is getting in the way of you living your life and the things you want to enjoy and who you want to connect with, that's the biggest problem. And I think oftentimes when it's too close to someone's face, and it's our job to pull the picture back of, hey, look, whether we do this tax planning strategy or not, and we miss a year and you want to gift to the kids or do whatever it is, what's important is that you're aware so you can make educated decisions.
Yeah, and this goes back to listening and discerning, right? The conversation was, we're spending way too much on this. I can't draw myself back enough to go do the things I want to do because I see this huge expense item, the quarterly tax payments, and there's ways around that, right? And there's solutions to that challenge. realistically, when we're talking about tax planning though, my job is just to say, this is what I want your upcoming tax return to look like. That's really all it is. How we get to that number doesn't really matter to me as long as it fits within the financial plan. And sometimes hearing that said multiple times makes a difference for people, where I don't care if you're spending the money or we're doing a Roth conversion or another strategy, right? At the end of the day, I'm just trying to make your tax return look like what I want it to look like.
Yeah, and you really get to know people well when you're getting into that level of detail, because one of the conversations where this is all connected is having that long-term approach, connecting with a team, because we often get into estate planning conversations. Where do you want the money to go? You know, we know under current law, the way IRAs pass, that we do need to understand the tax bracket of the beneficiaries. And we've had a lot of conversations. And in fact, I think one of the most impactful things with my career as an advisor, working alongside Corey and other tax professionals at Modern, was it brought a lot of the kids into the conversation, or the grandkids into the conversation, because it always felt like, to me, it was almost like the tax guy was giving them permission to do the things they always wanted to do. They just didn't know how to do it.
Yeah. It's interesting that this comes up today. I mean, yesterday I had a meeting with a client, and we walked through the tax plan. This person is also undergoing changes to their trust and their estate plan. And he shared some personal information about his family situation, and it certainly makes a difference at how we view this long-term plan. Now, fortunately, in this case, it reinforced what we were already doing, but at the end of the day, again, all these things are linked together. So the more we know about you, the more we can connect with you, the more we know about where the money goes, that provides insights as to what is the right path that we take on any given year.
I mean, and there's been times that, I'm glad yesterday is an example of you didn't pivot, but I remember times that we did have to pivot, whether it was because potential changes in the tax law, potential changes in what this person wanted to do. God forbid a spouse passed away and we lost the Social Security benefit, they became a single tax filer. This was a very dynamic process. I think one of the things we often did really well for clients was we would sit down early in the year, have a general idea, within kind of 90-95% certainty of what that year was going to look like, gave us some freedom to be able to make some decisions for that client to be able to live their life, understand kind of where we should be taking money from and how much. But, by the time we got to October and November, there were often changes. Some of it was out of our control, some of it wasn't. And, being flexible was the most important piece. And we talked a little bit about the connectivity with the estate planning, but the same thing with risk management or, insurance. There's a lot of advanced strategies where tax planning and insurance and estate planning can all go hand in hand. And that's for a unique set of clients for the most part.
Yeah, for the most part.
But there's also been times that we've leveraged existing life insurance to fit within the tax plan or the estate plan. There's been other times that, I can think of an example that, going back to the enjoy and connecting piece, these people were so petrified of running out of money. And we showed them 51 different ways it was never going to happen. They couldn't overcome it. So they luckily were both young and healthy. They were retired relatively young, where we actually went out and they didn't need the insurance, but they felt comfortable knowing, hey, look, if one of us or both of us passed, right? I don't remember all the specifics. We were going to leave $1 million behind to our beneficiary, all tax-free. And what that did was it allowed them freedom to not only spend, but to be able to have a tax plan that made more sense. You also, on the back end, knew, hey, look, I'm gonna have $1 million tax-free go to this beneficiary. Maybe I don't need to be as, aggressive with this strategy or that strategy anymore because I do have this in my back pocket.
Right. And I think the thing I would stress here, Logan, is things change all the time, right? So our lifestyle changes, family events can happen, health can change. There's a lot of changes. This is not a set it and forget it plan. I mean, we saw it last year. Tax law changed in 2025. So how does that affect?
The landing spots of income changed drastically for a lot of people.
It affected almost every single tax plan I did last year. And so this is not a set it and forget it thing. Taxes aren't, insurance isn't, estate isn't, right? This person I was talking to the other day is almost 80 years old. Things are changing again, and that's okay. But we need to prepare for some of those changes. We need to be aware of those changes, and we need to adjust our plan accordingly.
I think one of the most underlooked things where the tax professional does a great job is with the investment professional. And, luckily at Modern, we're lucky that we have Stephen Tuckwood, Director of Investments, and his team. They do a great job of, helping our advisors pick the right spots to allocate capital and have a great platform. But you come in a lot, especially on our taxable type of accounts, like our brokerage accounts, because we do need to mitigate capital gains for some people. We do need to focus on where the income's coming from, asset location. There are clients that still have mutual funds, and those, not getting in the weeds, but we know those aren't tax efficient as ETFs. So it is a lot for you to maneuver, and sometimes there's give and take, and I'll let you talk about it. Sometimes you have to lay out the trade-offs to that client and say, hey, look, we can do this investment strategy, but it's maybe not the most tax efficient thing. Or if tax efficiency is the most important thing, we feel pretty confident returns are going to look similar, but this may have a higher return and we may pay more taxes. And
yeah, I think what you said about we need to put the client first. And again, we're trying to align these goals with what your objectives are, right? So when I look at something like a brokerage account and we have some challenges going on inside of this account, we ultimately have to ask, what's the purpose of this, right? And what's the objective of this money? Is it fitting into the purpose? Are we achieving the returns we want to get? But at the end of the day, I'm going to trust the client's judgment along with Stephen Tuckwood's judgment. I'm here more as a sounding board when it comes to the investments to say, is there a better path forward, right? Again, are we being the most efficient we can? It's really just trying to identify different opportunities through that investment lens.
yeah, and so once again, we see that all these pieces are connected. And you can't have one piece that's out of whack. And that's what we call our advantage offerings, is it's all about financial planning, or the client in the middle, right, the center. Then we have the tax plan, then we have the estate plan, then we have the risk management plan, and of course the investments. And we believe that all those pieces need to be connected for the client. If you're out there listening, or you're a client and you're not engaging with other professionals, you're missing an opportunity to build a relationship, a trusted relationship with someone, just like you have with your advisor or your doctor, whoever it may be. I think the CPA relationship's just as important. And I'm not talking about just the tax return. I'm talking about things hit the fan, a spouse, like we have a death of a spouse, like that we're not expecting, potentially something, an inheritance happens. Who are you calling to help with the tax aspect of it?
Yeah. We've gotten to know several clients during our time working together in the advisor type roles, and the relationship is critical. I've grown to love meeting and getting to know all these people and getting to know their personal situations. And all of these things are very intimate, right? We're sharing a lot of information about family and desires and death, right? A lot of our meetings look a lot different than if you were running a meeting solo.
Sure.
Just because we have a different focus on that piece. And so we get into a lot of intimate details with people, and that relationship is very critical.
Yeah, and it also just becomes, hey, look, if Logan's sick, get hits by a bus, whatever it is. Like I have Corey, right? I have other people on the team that I trust at Modern Wealth Management. It's not about Logan or insert whatever advisor. It's about the team working together because they really care about what I want to have happen in my lifetime.
Yeah, I mean, I think what you said there about this is not a static number. This is not a reflection of me necessarily. I might save a client a lot of money in taxes, but they might not really understand what we're doing. They just got the $20,000 bill. And so this really allows us to meet our clients where they're at and to say, where are you at and where do we need to draw more attention towards? And if it's taxes, then we really need to hone in on why, right? What aren't we achieving at this point? Where is the gap in what I'm trying to do versus what your understanding level is.
This is why this is such a great tool, is it's making sure that the advisor and the client and what they think is actually happening is happening. Because Corey, I'm sure you or the advisor or someone left the meeting thinking, gosh, this is such a great strategy. We're going to do such great things for these people. They left the meeting saying, I don't even know what they talked about.
I think sometimes, Logan, I can speak in Braille, right? Taxes are complicated, and always feel free to ask me questions when we're in a meeting, but this score is a chance for you to give us feedback on where you're at, what you're feeling, where at times when you're in a meeting with someone, it might not be the easiest thing to raise your hand and say, I don't get it.
Or you're maybe expecting that your spouse gets it.
Right.
And it's kind of one of those, I often imagine that when clients left my office over the years that they were debriefing in the car, right? Just like any couple would do, or, whoever. So you think that's a critical message around the confidence score. Corey, as we kind of wrap this section around tax planning, I think we've talked a ton about how it all goes back to the client and fits into the financial plan. But if someone's out there listening and maybe they're not confident in their tax plan, or maybe even their tax preparation, or maybe they're not even sure what they need to have a tax plan, what would you say to someone like that?
No, pick up the phone, give us a call, right? We're here to meet you where you're at. We've got the resources available in all these different areas. So it's important to make sure all these things are working in tandem, and maybe they are, and we just don't understand it yet. But let's pick up the phone, give us a call, let's go through everything there.
And what you're saying is critical, and it's something that we've put an investment in and time and effort in. And we do tax planning for clients and prospects 12 months of the year. There's often times that you have CPAs or tax professionals that say, hey, look, I'm in the middle of tax season, I'll call you in May or June and we'll talk about it. And that's just not the reality of what happens and when clients need help. So Corey, thanks for joining us today on Modern Money Moves. We'll see you next time. We've talked a lot about the Modern Confidence Score. If this is something you're interested in, or you want validation around your own plan, please click the link in the description, get your own Modern Confidence Score today. Thanks for watching Modern Money Moves. If you want more videos like this, please subscribe to the Modern Wealth channel.